Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be looking at a trend following indicator, or which is specifically the alligator indicator. All right, so we are going to be looking at a strategy that makes use of the Williams alligator indicator. Okay, so let's just add on the indicator to the chart, and here we go. This is the alligator indicator. We're just going to be using the default settings. All right, okay, so this is a trend following indicator. All right, meaning that traders usually use this indicator mostly in trending markets. Okay, because the indicator tells you the direction of the trend, and the indicator tells you when to enter and when to exit your trade. Okay, now as we can see, the alligator indicator is made up of three lines. We have the lips, which is this lime colored line, and we have the teeth, which is the red line, and we have the jaw, which is the blue line. Now, as we can see, these lines serve as dynamic support and resistance levels. Okay, when you have the price of the currency pair trading above the alligator lines, it shows that it is a bullish trend. On the other hand, when you have the price of the currency pair trading below the alligator lines, it shows that it is a bearish trend. Okay, now let us look at examples on how to use this indicator. Okay, so basically you have to be watching out for crossovers. All right, this strategy involves the crossovers of the alligator lines. Okay, so when you have the alligator lips cross below the tip, the first sign of a sell signal is to have the lips cross below the tip. All right, but you shouldn't enter yet. Okay, but that is showing that a sell move is building up. When you notice the lips cross below the teeth, it shows that a sell move is building up. Then before you confirm your signal, both the lips and the teeth should cross below the jaw. All right, remember that the lips is the lime line, the teeth is the red line, all right, while the jaw is the blue line. So when you have the lips and the teeth cross below the jaw, then your sell has been confirmed. You can then enter your sell trade right somewhere around here, and then your stop loss can be above the alligator indicator. Okay, you remember the alligator indicator is serving as a dynamic resistance, right? So you can use the indicator to determine your stop loss level. So once you set your stop loss above the indicator, you can then target the nearest support level for your take profit, or you can as well wait for a bullish crossover, which happened around here, before you exit your sell trade. Then the reverse is the case for a buy. For a buy, you have to be looking out for the lips crossing above the teeth. That gives you a sign that a bullish move is building up, right? And then after that, you have to wait for both the lips and the teeth to cross above the jaw. All right, when you have the lips and the teeth cross above the jaw, then that confirms the buy move. Okay, so once that buy move has been confirmed, you can then enter a buy trade. We can see that the confirmation happened somewhere around here, right? So we would have entered a buy somewhere around here, and then you set your stop loss just below the indicator, and then you target the nearest resistance zone for your take profit, or you can just wait for the bearish crossover to happen in order for you to exit your buy trade. Okay, so this strategy is one that is quite easy to use. Remember that you have to watch out for crossovers. When you have a crossover signal, then when you have a crossover signal between the lips and the teeth, then you pay close attention. All right, consider the lips crossing above the teeth as a signal for you to now pay close attention. Initially, you could be looking around, finding signals maybe across several pairs. But when you notice the lips cross above the teeth, it shows that you should pay close attention. Then when you finally have the lips and the teeth cross above the jaw, it shows that you can now enter a buy trade. Okay, and the reverse is the case for sell. Then you can also use other indicators for additional confirmation. All right, do not rely on the signals from the alligator indicator alone. Okay, in as much as the alligator is quite effective, the alligator can give you very useful signals. You shouldn't rely on this indicator alone. All right, do not use this indicator as a standalone indicator, because there is no indicator that guarantees profit. All right, no indicator is foolproof, no indicator guarantees profit. So make sure that you always combine this indicator with other technical analysis tools such as trend lines and support and resistance levels. All right, as you can see how I plotted support and resistance levels on the chart. The support and resistance levels can give you exit signals, can give you even entry signals, can help you confirm the signals you get from the alligator indicator. All right, in addition to this, watch out for chart patterns, watch out for candlestick patterns. For example, if you find a bearish candlestick pattern around a resistance and shortly afterwards you get a sell signal from the alligator, it even validates the signal more, because you will now be having a confluence. Because when the indicator gives you a sell signal and you find a bearish chart pattern alongside that signal, it gives you extra confirmation. All right, so you should also watch out for watch out for bearish and bullish candlestick patterns respectively. For a bearish signal from the indicator, watch out for bearish candlestick patterns. For a bullish signal from the indicator, watch out for bullish candlestick patterns. All right, watch out for chart patterns as well. And then it's important to emphasize risk management. Okay, when using this strategy, make sure you always observe good risk management. Make sure you always risk the amounts that you can afford to lose, and make sure that you always observe good risk to reward ratio. For example, when you get a signal, for example, let us use this sell signal now. When you get a signal, make sure that you calculate ahead of time the amount that you are risking and the amount you're potentially going to make. Okay, so for example, you can assume that you are going to exit at the nearest support, in as much as your exit signal could be when you get a bullish crossover, but you may not know when that bullish crossover is going to happen. That is the reason why you should assume that you will exit at the nearest support or exit at a particular support level, right? So when you enter, or when you are about to enter that sell, calculate the amount you are risking. So let's say our stop loss is supposed to be above the indicator, which is going to be around here, right? So when you have got the crossover, you measure the number of pips that leads to your stop loss from the entry price. It's about 180 pips, right? And then our exit, or our proposed exit, okay, is somewhere around 3200 pips. So you will measure it. You are risking about 18. Okay, this should be about 1600, right? You're risking about 1600 pips. You are risking about 1600 pips, potentially to make about 3200 or almost 3200 pips. So in as much as it's not exactly 1 to 2, but it's almost 1 to 2. So you will be sure that your risk to reward ratio is 1 to 2. So you are risking about 1600 pips, potentially making 3200 pips. So that should be a good enough trade. All right, that should be a good enough trade for you. All right, so once you have calculated this, you can then go ahead and enter your trade. All right, you can go ahead and enter your trade because you have a favorable risk to reward ratio. But in the situation whereby after calculating your potential, after you've calculated your potential risk and you notice that the potential reward is not up to times 2 of your potential risk, then you might want to consider staying out of that trade. Okay, yeah, so it's important that you calculate ahead of time the amount you're risking and the amount you're potentially going to make even before you enter the trade. Okay, so basically that is it. It's important to always use appropriate lot sizing. Okay, that's also part of risk management. Use appropriate lot sizing when you are entering your trades. So that is it for this strategy. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to turn on your notification bell so that you don't miss out from more videos that we upload. Okay, and also share this video with other traders who you think might find it insightful. Until next time, thanks for watching and happy trading.